Did you know that the Indian auto industry comes in the top 5 auto industries of the world? However, due to the current ongoing pandemic crisis, auto sector faces a lot of problems. To know about top 2 stocks which can take us through a comparatively less bumpy ride, check out the full video. Hi guys, CA Rachana Ranade here and I welcome you all to today's lecture on top 2 stocks from the auto sector. What I have done today is I have subclassified the sector into two parts. So I'm going to talk about one stock which is from the four-wheeler segment, which is the passenger car segment basically, and one from the two-wheeler segment. So let's start with the economy analysis of the automobile sector. Central government has mandated that vehicle makers must manufacture, sell and register only BS stands for, by the way, Bharat Stage 6, BS6 vehicles from 1st of April 2020. So basically a very important point here to note is that it's 1st of April 2020 which is the date and it has not been postponed in spite of corona. So how does this impact the automobile sector? If BS6 compliant vehicles have to be made, the cost of production of vehicles may increase in the range of 3% to 8% depending on the type and the make of the car. One more important point is that to make BS6 compliant vehicles, so BS6 again in simple terms stands for some emission related norms, some pollution related norms. So these are stricter norms which will ensure that there will be less pollution. Okay, but if you want to make such cars, would you need different machinery for that? Yes, different machinery, some high tech related machinery. So this will increase the capex. Capex is nothing but the capital expenditure. Spending on machinery will also increase. Okay, now because of all these things, what happened was government had imposed this, that we are going to make it mandatory that all cars to be sold on or after 1st of April 2020. Again, I'm repeating 1st of April 2020. And mind it, it's not only cars, I just said cars, it's any vehicles for that matter. So what happens in this case, if any company has already manufactured vehicles which don't comply with BS6 norms, there was a big pressure on these companies to sell off these vehicles in a come what may situation. So here what happens, supply is on a very high side but demand was not that much, because people like you and me were of the thought process that if I buy these vehicles and tomorrow what if government bans these vehicles, so better we'll wait till 1st of April 2020 when the vehicle manufacturer starts selling the newly compliant types of vehicles, then we'll buy it. So what happened, demand started to dry up when in 2019 only, and this demand drop has unfortunately continued in 2020, now not because of BS6 but because of the coronavirus thing. Government tried to give certain relief measures for the automobile sector, like they had some scrapping policies, they had removal of ban on purchase of new vehicles by the government. They also in fact gave some points like additional depreciation to the vehicle makers, but frankly speaking none of them had a very positive impact on the automobile sector. So our first stock for the day is Maruti Suzuki. A very basic advantage I can say of Maruti Suzuki is the brand that they have created in the Indian market, the factor of reliability that they have created in the market, Indian market, comparatively cost efficient cars that they have made. So in spite of facing a comparatively huge competition, they have managed to maintain their slot in the automobile sector. So the very first positive is that reliable name which they have earned in the market and being very cost efficient. Second is the return on capital employed. They have managed to pull off an ROC of more than 27% on an average for the past 3 years. And third, which is again a very important point, is that they are almost a debt free company, and I've told this many times in my previous videos as well. In the current scenario where there could be liquidity crisis, if a company has almost zero debt to equity ratio, that's a very big positive point. Now let's move to some negatives of Maruti Suzuki. In spite of having a comparatively good ROCE, they have not given a good growth as far as the revenue numbers are concerned. Over the past 3 years, their revenue has grown at a mere rate of 14.34%. One more very important negative point is that a news had recently come up which said that Maruti Suzuki had cut its production by 32% in March. You can imagine this, the sales the production itself is cut by 32%. what impact it will have on sales and in turn on profitability. So that is why if you have heard the first part of the video very carefully, I've mentioned the words which stocks can give us a comparatively less bumpy ride. Entire automobile sector is expected to show a little bit of downfall even in the coming days. So I feel that in spite of having some positive points for Maruti Suzuki, the very fact that they have cut the production by 32% in the month of March is a bit scary. Let's talk about a very interesting fact of Maruti Suzuki. According to the Society of Indian Automobiles Manufacturers, SIAM, in April 2019 till January 2020 period, Maruti Suzuki sold a total of 12 lakh 4,404 units of passenger vehicles, cornering 50.59% market share. So the point that I was telling you right now, in spite of all these production cuts, in spite of the BS6 problem, Maruti has been in a position to sell off 12 lakh 4,404 passenger cars, and most important point is that in spite of facing a good competition, they have managed to corner 50.59% of the total market share. Now let's talk about the second stock of today, which is more into a two-wheeler segment. Maruti Suzuki was into the passenger car segment. The next stock, which is Bajaj Auto, is more into the two-wheeler segment. Let's talk about the top 3 positives of Bajaj Auto. Number 1, again, it's a virtually debt-free company. So I always said in these days, difficult times, liquidity pressure times, debt-free company being is definitely a big positive. Second one, FII and FPI institutions have increased their shareholdings. I always feel that the most intelligent people in our stock market are FIIs. So generally what happens, who fails miserably in the market is the retail individual investors. FIIs lose money comparatively less number of times. So a simple thumb rule, if FIIs are investing in a company at a greater pace, it means that they are also seeing some value in the company. So generally in fundamental analysis, if FIIs or FPIs, foreign portfolio investment, FPI, if they are increasing their stake in any company, it is considered to be definitely a positive point. High dividends with rising dividends over the last 5 years. So they are a good dividend paying company. So for those who are dividend lovers, I think this is again a positive point for Bajaj Auto. Now let's talk about some negative points of Bajaj Auto. The very first one is they are not able to maintain a good return on capital employed. See, the moment I say ROC is not good, it means that the utilization of funds, utilization of capital which is available with the promoters, that is not being done in the best possible way. So that's definitely a negative point. Second one is declining net cash flows and companies not able to generate net cash. So what does this mean? It might happen that companies in profits, but they are not able to generate sufficient cash. Now, why does this happen? So you can imagine something like this: companies sold off their cars to wholesalers, to dealers, and these dealers were not able to pay the manufacturer in time, or they paid, but some of them paid, some of them did a default, or they are making late payments. So if this be so, what happens? Profitability is good because on paper sale has happened, on paper profit has been booked, but problem is with what? Problem is with liquidity if these dealers are not paying Bajaj Auto in time, and that is what has happened with Bajaj Auto, which is the second negative. Third one is not only cash flows, there is a major fall in net profit, TTM. What is TTM? Trailing 12 months. So for example, Bajaj's latest available results are from December 2019. So we are talking about TTM means what? December 2018 to December 2019. Trailing 12 months. That net profit has also fallen by quite a bit. One interesting fact about Bajaj Auto is that Bajaj Auto continued to top the two-wheelers exporters list as the OEM sent. OEM is basically an original equipment manufacturer. OEM is a term which is very commonly used in automobile sector. So do remember this, original equipment manufacturer. Okay. Bajaj Auto sent over 18.6 lakh units to its export markets. Bajaj two-wheelers contributed to over 53% of the two-wheeler exported from India. The exports volume grew 10.2% in FY20 for Bajaj. So I hope you're understanding this. When I was talking about Maruti, they also had more than 50% share in the sale. If I'm talking about Bajaj, of course I'm talking about export sales in Bajaj, but still they have managed to break that 50% barrier. They have gone beyond 50% of the total exports of India. So I hope you understood this point. So for example, if 100 two-wheelers were exported from India, 53 out of that were of Bajaj Auto. So that's definitely an interesting fact that they are still a clear-cut market leader as far as the exports in the two-wheeler segment is concerned. Now let's go quickly through the financials part. Please please understand this, that I am not comparing Maruti versus Bajaj. It would not be a fair enough comparison because one is into the passenger car segment, one is in the two-wheeler segment. Although I'm discussing the financials in the same part, it does not mean that I'm comparing these two. Okay, I hope you understand that they are into two different subcategories. For Maruti, the sales growth 5 years CAGR was at 14.46%, but 1 year is at 7.85%. So big drop in sales. Second, profit, which was at 21.93% CAGR for last 5 years. In the last year, it was minus 2.86%, because I've told you that the problems for the vehicle manufacturer started in 2019, not from coronavirus. They have started their problems since the previous year only. As far as the ROE is concerned, return on equity is concerned, 5 years average was CAGR was 19.12, but 1 year is at 17.07. Whereas ROCE, return on capital employed, 5 years was 26.4 versus 1 year is at 23.91. So as far as the capital employment is concerned, or as far as I can say, these are called as the efficiency ratios, ROCE, ROE. Efficiency ratios means what? How efficiently the capital is being used. These are not that bad. So these are comparatively, I can say, almost the same. 1 year and 5 year is almost the same. Problem is with the revenues and profits. Let's also understand quickly about Bajaj Auto for these 4 parameters. Number 1, sales growth is definitely good for Bajaj Auto. 5 years was 8.47%, but 1 year growth has been like 19.95%. For profit growth also, it was 7.59% for the 5 year versus 14.92% for 1 year growth. So for Bajaj Auto, it's a little bit reverse scenario where the 1 year CAGR is higher than the 5 years CAGR. ROE is again more or less similar, but I may say that for Bajaj Auto, ROE as well as ROCE, 1 year average has dropped as compared to the why am I saying average in between? 1 year return has dropped as compared to 5 year CAGR return. Okay, so if you're, again let me repeat, I'm not comparing Bajaj with Maruti, but Maruti has not done good in sales and profits, but they have done good in ROE, ROCE. On the other hand, Bajaj has done good in sales and profits, but not with ROE, ROCE. Okay, if you have seen my video on economy impact because of coronavirus, I have separately explained about auto sector as well, and in that I have explained that how two-wheeler market specifically can get positively impacted because of, as a post effect of corona. If you have not checked out that video, you can check it out here, click it and watch it after this video. Now let's talk about the promoter holding. Both Maruti and Bajaj have a decent enough promoter holding with more than 50%. PE versus industry PE for Maruti Suzuki is not so much in favor of Maruti Suzuki. They are trading at a very high PE as compared to the industry PE. As far as Bajaj Auto is concerned, the PE versus industry PE is more or less the same. P to BV, which is price to book value ratio, is 3.41 for Maruti Suzuki and is 3.04 for Bajaj. Inventory turnover ratio, again I've mentioned this so many times, higher the better. For Maruti it is 25.9% and for Bajaj it is 31.46%, and the PEG ratio is 1.43 versus Bajaj Auto 2.01. All in all, PEG, if you have checked out my previous live streams, then I've explained PEG ratio in a very proper way. You can quickly check that and understand what is the interpretation of this 1.43 and 2.01. Well, I hope you have understood about the entire discussion about top 2 sectors from automobile sector. Number 2, I hope you have understood that both these stocks which I discussed today were from different subcategories. Number 3, I hope you have understood that as far as the automobile sector is concerned, I am not very bullish on this sector. I have repeatedly said this in this video as well and in my previous videos as well, that this is a sector which will show a comparatively slower recovery as compared to other sectors. I am giving you a caution note while investing in this sector, any companies for that matter, but always before investing your own hard-earned money, do a proper research and then only invest in this. I hope you are liking my content. Do consider subscribing my channel and do consider sharing this video with your friends as well. Well, that's it from my side for the day. Jai Hind and bye bye.